Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Friday, February 15th, 2008. Well, here we go again. Another Friday has come and gone, a full week has come and gone, and the markets had a decent week. We saw 3 days of rally, 2 days of pullbacks. And again, going into Options X, that's almost always the case. You always have that whipsaw where you're going to have a move up, a move down. The majority of the move will go the opposite way of the majority of those holding puts or calls. So in this case, more people bearish out there holding puts, going into options expiration where those options become worthless if they expire, out of the money. And that's exactly what we saw. So we saw the rally in the early part of the week, the pullback later in the week, and all in all, we had a decent week. It was a positive week pretty much across the board on the indexes, and we had a very interesting day on the charts today, and I want to point some stuff out. Number one, volume today was extremely light. Usually Options X, especially the Friday of Options X, you have a majority of the volume in the morning, a lot of volume in the morning, and then volume in the afternoon just dies out and is dead. That's pretty much what we saw today across the board, and you can see the volume candle right here was very, very light. But usually there's a ton of volume in the morning, and we didn't really see that today. All in all, we did less than 1.5 million contracts on the ES futures, and that's very, very light. So it was very peculiar to see that. Volume in the afternoon definitely lightened up, and we'll go to the intraday so you can actually see that. Here's all the volume as the options are getting basically, taken care of and closed out, and everything getting figured out. And then look at this volume die out here. And then late in the day, we did see a little bit of a jump in volume as we did push up, and I'm going to get into that here. But let's go right into the daily here, and let me get out my trend tools. We'll start with the intraday, in fact. And what did we see here, guys? We saw ultimately a sell-off early in the day, okay? Early in the day, we saw a sell-off, and notice how that big push down happened here. We had the New York State Index, the Empire Index, come out, which is an indicator of economic activity this morning at 8:30. And it was very bad. It came in well below. But notice this, folks. Right here, especially right here, if not all the way up here, this news was leaked out. And it was obvious it was leaked out because you got panic sellers here dumping, but that ultimately became the bottom. And look at this sell-off here right before, especially starting right here. Right here, it got leaked out absolutely. Got a little pushback, then an initial push down on that news. And then we really started to rally. You got a nice little bottoming tail in there. It wasn't really a bottoming tail because you wanted to close up in this area for a true tail, but nonetheless, nice tail there. You got a push up and then a retrace back down as we saw more selling there, and another push up. Now this is the beauty of it. Look at this topping tail here. Look at how beautiful that tail is. And I pointed this out in the chat room here today as we discussed the markets during the day, and you saw a push up in the markets. We touched the 50 moving average just right on. Notice how it's hitting the 50 moving average right there. And then we sold all the way down, closing in the lower portions of that. That's a perfect sell signal. We got a sell-off there, small bounce, another sell-off, and then we started to rally. Now, the volume was dead, so obviously you favor the upside. Any one of you guys that have been watching our videos for weeks to months now know that in light volume, you always have to favor the upside. Sure enough, as volume lightened up here, and again, look at the volume down here, dead volume, we started to rally. You got to push up to that 50. Again, you got to pull back, and then we really blew through, ending right on the 200. So again, just looking at these charts, it's amazing to see to me how we just come into these moving averages and how these moving averages play such a key role in the market and where we end up, where we pull back from, where we rally from. So a very interesting day to me, considering the bad economic news, and I think this is a general sense, is that we do have another move upcoming, or at least there's most likely another move up. You guys know we called the rally early in the week. We saw the pullback the last 2 days. The S&P actually ended positive today, so we rallied all the way back to close the S&P up. The Dow ended down just 28 points, and the Nasdaq ended down about 10.5. So we continued on the Dow and the Nasdaq to pull back, a 2-day pullback. The S&P closed positive, and considering the bad news out there, you have to favor the upside now going into next week. Now, it is a 3-day weekend, and that's important to realize. And let me switch back to the daily chart so we can look at that. So keep in mind, anything can happen over this 3-day weekend. If we get some news that's negative for these markets, we can get crushed very quickly because that is a bear market tendency. But considering no news going into next Tuesday, I would generally favor the upside. Just a slight bit favoring of the upside. We've had a 2-day pullback here. And you can see here, look at this beautiful pullback. You had the rally that we talked about last Thursday, which led us up into this week. Then you had the 2-day pullback right here. You had a pierce of the 20 moving average. Let me remove that line so we can really see it. Notice how we were below, but they brought us all the way back to close us above the 20 moving average. That's a positive signal, folks. A little tail on the bottom, closing back above the moving average, can often signal another up move coming. All right. Now, I'm not saying any major up move, but possibly an up move to in this area here, or ultimately in this area right around here, somewhere around that 50 moving average. This would be the target number 1 right here. Target number 2 should we get through target number 1. All right. So now let's take a look at the SPY, and we'll just kind of touch on that. It's the same basic chart. You had this big move up after the big fall in January, the pullback, then the next move higher here, and now we've had a 1-2 pullback, although we did end again a very bullish ending to the SPY here as it pushed all the way from below the 20 moving average to close, causing a green candle here right above, and we closed right here, which is just a tick or two above that 20 moving average. Now the Nasdaq's another story. The Nasdaq has been the weaker index. It continues to be the weaker index. Percentage-wise, the Nasdaq this year is much, much lower, down much more than the S&P and the Dow, and we will look here. Now, yes, we did rally back on the Nasdaq after a 2-day pullback, but nonetheless, it has been a full 2-day pullback. Yesterday, the Nasdaq was down 40-ish points. Today, we were down another 10 points, and we are below that 20 moving average. So looking at the Nasdaq on a chart basis here, I still, believe it or not, just going with a gut here, I still think we still have another move up on the Nasdaq to come with the rest of the markets, but this is much, much the weaker chart. And again, the basis for that is that we were able to, even after pushing through, we never confirmed the move up by getting above that. We sold off a Thursday, which was yesterday. We sold off hard, pretty much engulfing that green candle. And then we did also sell off a little more today, although it is still giving me a little bullish sign by having that tail at the bottom and closing here. But as long as we maintain below that 20 moving average, you almost have to be very, very cautious, and I'd be very careful playing any side of the Nasdaq for now until we see the Dow and the S&P bring the Nasdaq up and start pushing up again. All right. So across the board, gold sold off today. We were down about $5.10 on gold, and we did see some other commodities selling off from their highs. You can see right here is that the USO, this is the chart of the USO, is making a nice pattern here. Definitely a beautiful W pattern, but we did top out here a little bit, and we were up much more. We did sell off all the way down here on the USO today, but we closed higher as well. The USO closed up 17 cents, though it had gapped up all the way up here, and it still closed right over here. Still positive on the day, but off its highs, obviously. All right, so again, we were off the highs on oil. Gold closed down today. We saw a little bit of a pullback in commodities from their highs. Now let's take a look at some intraday stock charts and various stuff. We want to pay attention to some of these larger cap technology stocks. One stock that didn't perform too badly today was Research in Motion. Research in Motion hovering, and this is the daily chart of Research in Motion, hovering between two moving averages. Really until we get above this one here or below this one here, you can't really, excuse me, let me draw that a little better there. Below the 20 moving average and the 50. So here's the 50, here's the 20. Really until we get above or below one or the other, you can't assume either way. It's stuck in a trend here between the two. There's going to be resistance and support on both sides, and you got to kind of wait to see which way it goes. Apple Computer. Apple Computer is oversold right now, no doubt about it. You could almost look at it as a possible positive divergence here on the stochastics, but even if we do rally over the next week or so and the markets or get a little more of a push up, ultimately Apple's going lower, but it may see a nice appreciation before then. It wouldn't shock me to see if Apple gets in somewhere up in this area before the next push down. Again, that's just my speculation, anticipating a positive move in the markets, one more positive move in the markets before we really get clubbed again. And again, I kind of stress that is because we're not out of the woods yet. I don't want people thinking, let's just run all and put it, go into stocks. I'm virtually all in cash. I have a couple long positions, some small long positions. That's it. Just two of them to be fair. And we've talked about those in the chat room. Ultimately, you got to assume this market's going to get hammered again and go back to the lows. Let's go back to that Nasdaq chart here, and let's take a look at the weekly. As I like to take a look at the weekly every once in a while here, and see if we can see anything. And this is the first time I'm looking at it here, so let's kind of take a look. Here's the weekly chart, and I like to look at this bigger time frame. It gives us a better view. You can see the trend line breakdown. There we go. You could look at it like this. All right, it's one trend line. You can also look at this trend line, which broke us down there. All right, we did break below. We retested that upside. Now the question is whether or not we retest this upside one more time before going down. Ultimately, I think we're going to kind of fall in the Nasdaq back to the 2100 mark. Go at least 100 points lower than the low, which was about 2200 on the Nasdaq. But again, that's in a while. I don't want to really focus on too much. Let's play the near-term market. As a trader, we want to be on both sides of the market. Whichever way it goes in the near term, we want to be there. Then we reverse our position and go with that. So we are neither bulls nor bears in this market. Keep that in mind. All right, folks, just a quick announcement. Sunday night chat is now Monday night. Make sure you know that Monday night 7:45 is the moved Sunday night chat. All right, because the market is closed Monday, so we will take care of that. Have a wonderful day. We'll see you in the Sunday night chat or in the chat room on Monday. Take care.